a lot of money. You know what I mean or not? Okay, you can buy call option and it can go up 100%, 200%, or even 1000%. Okay, so this is the power of the options. Okay, call options. Okay, put option now. What is a put option? Okay, a put option basically is, we call it terbalik lah. Okay, in PM is opposite. Okay, meaning that if you really know something very bad is happening to the market or to the specific stock. Okay, just now actually I never explained about this part. Now suddenly I remember. If those still remember September 11, okay, those you know, old enough to know about what is September 11. Okay, September 11 actually the terrorists strike, okay, Twin Tower in New York City. Okay, so what happened that day? That day actually is on Tuesday, I still remember. Okay, morning, 8 o'clock in the morning, 2001. Okay, and it remember until now, you know. Okay, so during that period of times, okay, the stock market crashed, especially the airline stock, because people in panic, you know. So before the event happened, 2 months before the event happened, there are actually a lot of big buyers from Middle East is shorting the stock or buy the put for the airline stock. Okay, like Delta Airline, the American Airlines, or United. These are the three famous airlines in US lah. All right, okay. So basically, you'll be surprised, you know, this is a real thing, you know, okay. So when the 9/11 happened, okay, actually people already know already. Okay, so if you know this kind of event, what you do here is you can buy the put option. So basically, you buy the put option before other people know. You can see, okay, the price is still very cheap. For example, you buy in like $1. Suddenly, the stock price go down $10. How much you can make? You can make $9. Okay, because you have the right to sell at a certain price. Okay, so the options price will go up a lot when bad thing happen. Okay, so this is actually a put option. Put option normally used to protect your your stock position also can. So you won't lose this much, or basically, you know, you want to collect the stock for dividend or for long-term growth. You can using some calculation like 6-month put options. Okay, so at least this 6 month, anything happen, you at least protected. What you do here, you lost is actually only the premium that you pay. It's just like the premium you pay to the insurance. Okay, guys. Any question, guys? I think doctor just joined us. Doctor, you have any question? We have two doctor here. One is a real doctor. Another one is a PhD doctor. Mr. Dr. Peter Lau, how are you? Long time Dr. Ma didn't see you. Dr. Ma, no sound one. His style is all using typing one.
Hello, Mike.
Okay.
Hello.
Hello, yeah, Albert, yeah.
Mike,
Yeah.
the strike price is also the exercise price, is it?
The strike price also the exercise price. Yes, you can say like that, correct. Okay, is that not? Okay, yeah, for the call option, yes. Okay, so basically you buy that price, you can exercise at that price. Exactly. All right, good. Okay, yeah.
Mike,
Yep.
the strike price is not what we paid for the option, right?
No, the strike price is basically it's just like 1 million, the house price. You know, I give you example just now, right? Okay, that is the strike price is not the option price. The what you pay for the option is the premium. You see just now I give you an example here. You want to buy a house, right? Okay, but you just pay 1%. The 1% here is 10,000. Am I right? Okay. So the 10,000 actually is the option price. Okay, it's the one you pay. Okay. The strike price here actually you already agree you want to buy 1 million. You know what I mean or not? Okay.
And the strike price in stock, the strike price in stock market, right? Who is the one deciding the strike price?
You can decide. Oh, you mean normally the strike price is basically decide by, if you want to write the option, you actually can put a strike price there. But normally they have a standard lah. Okay, the standard is
Okay.
like $1, $1, $1. Okay, for the biggest stock, right? Okay, like Apple, all this thing you can see. Maybe the strike price is further a bit. Okay, for the price with, let's say, less than 251, normally it's $1, $1, $1. More than 251, normally it's 250, 250, 250. I mean the
Okay.
differences. You know what I mean or not? Okay, you can
Yeah.
see here, if let's say you can see here. Okay, you can see the strike price here. Okay, let's say we look at the call price. Okay, the strike price here. Okay, okay, you can see $20, 22. This is actually the differences is $2.50. You get me or not?
Where is the $20?
Pardon me? No,
Where is the
I
strike
already
price for?
the money already. Okay, we look at near the money one. Near the
Oh.
money one is 50 cents. That means actually the strike price the differences between the strike price is like 50 cent, 50 cent, or $1, $1. You know what I mean or not? It all depend on the all depend on the stock. You know or not? Okay, but normally when you go into the option market, right, the strike
Okay.
price there is already day one already. You get me or not? Okay, so you have here you can see here is a 50 cent
Okay.
differences, and then suddenly here, okay, there sometimes it's not really that standard. So here is a $1 difference already. You see or not? Okay, here you see can come back here again
Yeah.
25 cent. You know what I mean or not? Okay, so normally when you want to choose all this price, okay, it's all
Yeah.
it's all you have to determine what price the stock will go first. You know what I mean or not? And normally if you really of course that part we're going to touch on option 202. Okay, that is actually depend on the theta also, the time also, because if you think, hey, why I don't want to pay $3, I want to pay $1. Okay, but can the stock price go up until this level plus the premium? You know what I mean or not? If cannot, you buy here also no use. Even okay, the directions, you are the same direction of the stock, however you lost, because before near the expirations, right? Okay, your premium already burned already. Let's say this expiration actually is a 20th of November. Let's say we say this week one lah. Okay, this Friday one. Okay, and we look at the trader table. Okay, it's easier to see. Okay, so basically, okay, we look at okay, let's say you say, oh, I don't want to pay $2 for Apple stock because I don't believe Apple stock can go beyond $2.45. Okay, because the stock now have to go beyond, this price only you can make money, you know what I mean or not? So by Friday, even the stock go up to 119, you still losing money. You know what I mean or not? Okay, you understand or not? Your 245 will become 1.45. You get me or not? Okay,
1.45 or 1.9?
just an example only, like, because
Oh,
this is
okay, okay.
$1, $1 difference. You get me or not? Okay, so basically it's 2.45. Okay, but of course the calculation of option is not that straightforward. Just let you know. Okay, so that is the part actually we're going to touch on the option 202. Okay, which actually Dr. Peter already go through. Okay, because how to determine the option price. Okay, option price can determine by like the delta. Okay, like the gamma. Okay, all these things is really we cannot cover within this 2 hours one. All right. Okay. In fact, that 2021 we actually use 2 nights to cover it. All right. Okay. So, but I just tell you a very simple example. Let's say assume they really follow lah. Okay. So basically, if by Friday, Apple at 119, okay, you buy at 245. So by Friday, so basically, how you are losing $1 here. So 245, you have to minus 1.45. You understand or not? 2.45, you have to minus. Why is it 245? I'm using cent lah, easier to calculate to say lah. You understand or not? Okay. So 245 here, you have to minus $1. Your options value because it's in the money, so they still have an intrinsic value there. So it's become 145. So you are losing $1. Even your direction is correct. You know what I mean or not? Okay. So if this Friday, okay, Apple price end at 119. Sorry to say that if let's say you buy, you pay 80 cents,
Yeah.
but your premium already burned already. You know what I mean or not? Okay. So by Friday, if you say you buy out of the money, okay, you must know that this price must end at, let's say,
somewhere in the remote countryside.
You must actually know that this price must at least more than 100
Politicians don't want to study the Quran.
80 cents.
The Muslims were ruling over us at
More than that.
the figuring the last count.
Yeah, I know. I think it's from you because you never off your mind. It's from you, not from me. Okay. Huh? Really? When you mute it already, it's okay. Everything okay already. Okay, it's from you. Okay, it's from your background. Okay, okay. Now it's good already, right? Okay. So basically, this is actually how you determine. You're not necessarily right. Okay, okay. That even your direction is right, but your calculation is wrong. You you won't make money from out the money option because there's no intrinsic value already. Okay, by the times, okay, if let's say the stock not go up beyond that price. Okay, so in option 202, we're going to study what is called intrinsic value, what is extrinsic value. All these are very important to determine how you know where is the options, how can roughly estimate how much the option worth during the expiring date. Okay, but today I just want to make it simplify for you to understand. Oh, it's like that, like that. Okay, so this part is called out of the money. Okay, this is called in the money. So normally in the money you still have intrinsic value. Okay, but when you're out of the money, normally if doing expiring debt, okay, the price is not higher than your strike price, or even higher, you have to be really high, okay, more than the premium you pay, then only you can make money. All right, so in other words, if you want to choose option, there's a way also. Okay, so in the advanced lesson also, we will guide you what is the options you can choose. Okay, or you don't want to buy option, the moment you know when more and more about option, unless you really okay want to goreng one every days, you look at the chart, like Dr. Mao, who's a very expert on the chart. Okay, so he know this price when you want to spike, so what he do here is this is very good way for him to buy options. Why? The moment now, okay, he know the price is going to push up already. Okay, so he can buy in the money one. So the chances for to make money is very, very high already. Okay, so option actually is very, very little related to stock market. In fact, actually is really related lah. Stock actually is the mother. Okay, option actually is like son and daughter. You know what I mean? Okay, so basically is very, very related. Okay, so basically if you have an experience in stock market, especially the chart, it's very useful. Okay, when you play options market. Okay, okay, so basically normally what I do here is I using a very simple way to determine the chart lah. Okay, the volume. Okay, or maybe you can using the view up, the most people common use one. Okay, and then RSI. Okay, so all up to you. Okay, so all up to your expectation how the price will go. Okay, and as long as you know how the price will go or within a range, okay, you will love option a lot. Okay, you can make a lot of money there also. You can expect it how much money you make also. Okay, so this is the beauty of the options. All right, okay, so for those who just join, like I say, you can always ask questions. It's a very good question just now. Some people ask about strike price and this and that. Okay, so you must understand the basic of the options, what is a call options and what is actually a put options. All right, okay, so when you buy a call options, you expected the price will go up. Okay, when you buy the put option, you expected the price will go down. All right, okay, so we're going to stop for about 5 minutes time, take a rest, okay, before we go to the platform. Okay, so if you have your mobile with you, please if you don't have a mobile with you, you please go to get your mobile ready. Okay, because we're going to mention about how we're going to look at the real life options already in the platform. So what you do here is you have your mobile ready, you just using your mobile, go to mtradego.com here. Okay, so you come to trading here. Okay, as you can see here, currently the mobile MTRADEGO is only for stock market. We are building options now. Maybe you're going to ready about 2-3 months. Okay, because there's a lot of data. Options, the data is much more than the stock, you know. Okay, so that's why it takes quite long for us to build the interface. All right. Okay, so what you do here is, okay, you go to your mobile, you just type in this MTRADEGO, and then you can choose trading. And if you are Android, you just click here, you can directly install. We are using Handy Trader first at this moment. You want to using desktop PC, okay, you can actually click this one. All right, you want to using a web version, you can using this one. Okay, in fact, I think the web version is much better. Okay, later I'm going to show you on the web version one. Okay, so but normally when I do my trade, I like to using this iOS, okay, or Android, okay, meaning that actually I using the mobile to execute my trade. But you want to look at a clearer view, you actually can go to MTRADEGO web. Okay, so if you don't have this Handy Trader yet, okay, you actually can install it now. Okay, I give yourself 5 to 10 minutes. Okay, then we're going to use the Handy Traders. Okay, I'm going to show you how it works. Okay, and then also I'm going to show how the MTRADEGO web. Okay, so the MTRADEGO web, what you do here is actually it's same like it's a client portal also. Okay, so what you do here is you can log in by your username and the password. Okay, and then key in your security code from your handphone, and then from this we're going to learn I mean how to view the table of the options, because that is clearer also. And also I'm going to show you how you're going to look at the table of the options using Handy Trader. All right, okay, both actually the data all the same. Okay, so you please take your time for about 5 minutes, okay, before we continue. All right, okay. If you're already in this website, you can log in already. Okay, you can log into the web version. Okay, if you are using your laptop with you. All right, so if you are using a handphone or whatever, or you have both, okay, handphone one, using handphone, because normally what I do here is I'm using handphone to execute my trade. Okay, but to see the clearer data, actually I will actually using the web. Okay, because it's a big screen. Okay, give yourself 5 minutes. Okay, before we continue. All right. And you have any question also, you can write down and ask me, okay, or
come out from this speech. The reality is that just under half of U.S. voters cast their voice for the incumbent U.S. president. What extent reconciliation featured here?
Well, it was a powerful speech that he gave. We saw President-elect Joe Biden calling on the nation to unite in what has been a very divided America. Like you said, we did see 70 million voters voting for President Trump. So he is calling for Americans to come around and support him and give him a chance. And all this the backdrop of COVID, which he also highlighted was a priority for him. And he gave this acceptance speech, notably before the incumbent president has conceded. So that was a notable feature as well. And I just want to take a minute to just highlight how historic this has been. And this is a man who has run for president 3 times. He is going to be the oldest president-elect in U.S. history, and beside him, Kamala Harris is the first woman and the first woman of color as well in this position. So no matter which way you look at it, it has been very historic indeed, and the celebrations across the US were evident, and I certainly noticed that here in New York, hearing lots of singing on the streets, hands clanging. The excitement really was very palpable.
Yeah, lots of those images going across Twitter. Rudiger, what has been the response from the Trump team? You look at some of the statements from the Trump-Pence camp, statement from the president, and then you look at Joe Biden's, obviously
there are certain challenges to Joe Biden's legitimacy from the Trump team at this juncture.
Well, President Trump was on his golf course when he got the results, and he outright refused them. He has not spoken to the public. There's been a lid on public events, but he has taken to Twitter and said that he still believes that he's the legitimate winner of this election. But we will be watching for more of his tweets and also wait to see if he does end up speaking on the Sunday. Now, Trump does, I will point out, have the right to challenge these votes, but he has to bring some evidence. And so far, there's been no evidence of voter fraud. So that means that his lawsuits haven't really gained any traction. And it's very difficult to overturn what could be thousands of votes in some of these states. But what has been interesting is to note is that a lot of these Republicans have not come out and congratulated President-elect Joe Biden, notably Mitch McConnell, the Senate Majority Leader. And that is likely because Trump himself has not conceded. But we have seen world leaders from the UK to India come out and congratulate Joe Biden. So that's likely to put pressure on President Trump to concede.
Mm-hmm. What's behind this latest resignation?
Well, the resignation by Berat Albayrak, who, of course, since 2018 has been Turkey's finance and treasury minister, and of course, President Erdogan's son-in-law.
Okay, guys, we are back. Okay, so basically, if you have any questions, like I said, just unmute your mic, okay, and ask, okay, as far as as much as you can. So basically, our objective is to learn things here. Okay, so if not, basically, you can actually, I will try to log into the client portal first. Okay, so if you have a laptop with you, try to log in using your username. Okay.
Wow, the future went up 1,500 over points.
Wow, good. Actually, when you are long enough in US market, you not really like feel excited anymore,
Is it?
You know what I mean or not? Okay, as you see the market up and down quite often already, so nothing to be too excited already. You get me or not? US market, the Dow is go up 1,005. Okay, the S&P, they are welcome Biden's lah. Okay, I think Biden will be definitely give a more confidence, okay, to to stabilize, okay, and then also for a long-term prospect, okay, because of Biden's not interfere a lot to stock market like what Trump did, okay. I don't think Biden have a tweet on stock market, honestly, like he won't, okay, if you really study this guy background, okay, he's really a statesman, focused on the politics and social issue rather than the stock market one. Yeah, crazy. 1,005. Okay. Apple has been gone up $1.46. AMD 86 cents. Okay. Berkshire $12. Okay. Starbucks, how about but NEO is going down. Okay, the futures. Okay. Facebook is going down. Starbucks is going up $5. Tesla is going up $10. Okay. Under Armour is go up. Wow, $1. Good, 7.6%. Okay, good. Very good. Okay. Okay, so you guys already logged into your this web version already?
Yes.
Zoom down. Oh, what happened? Is there anyone Zoom okay?
Yeah, okay.
Okay, yeah. Okay. What happened to, we have some friends here that Zoom down. Okay, so basically, you already log in. Anyone already? Everyone already log into your this web versions. How to trade? You already log in? Okay. So today I'm going to show you two versions. One actually is a web versions. Another one actually is using the mobile versions. Okay. 460 2 oh. Good. Today my portfolio is go up about 5,000, 1,000. Okay, not bad lah. Okay. Okay, so basically once you are in here already, okay, if you want to find the stock that you want to trade, okay, you can actually click this button. Okay. For example, some stock I research one like Starbucks, I can find the Starbucks here. Okay, Roku actually is a very crazy stock. Okay, can make you very fast become very rich also, but if you're not careful, it can break you also. Okay, so let's say we choose any stock. Okay, Daniel, since you are a newcomer, choose any stock you like, Daniel. US stock that you know. Hello, Daniel, are you there? Hello, Daniel, are you there? Daniel is no more. What happened to Daniel? Daniel is not in the picture anymore. Okay. Okay. Kamaruzaman or Abdul Fattah, can you choose any stock you like? US stock that you know?
Tesla.
Wow.
Very expensive for Tesla.
Expensive, huh? The options
Neo.
you good money also. Okay, we choose Tesla.
Nicola, I don't want.
Okay, never mind, we choose Tesla. Okay, so when you look at Tesla, okay, you can see the Tesla. What you do here is you click Tesla, and then you can see Tesla price. Okay, and then you can see the option change here. Can you see that? Okay, I make some money. I hold a bit only lah. I used to hold. I should hold more, you know. Okay, I used to hold 25. Now I only have 10 share only of Tesla. Okay, so what you do here is you click the option change. Okay, so you can see exactly same like okay, so because this data, okay, is a delay data. Okay, so you want to live data, you have to subscribe the market data. All right. Okay, we have some user already subscribed the market data already. What you do here is you actually can come to the market data subscriptions here. Okay, because actually I have two accounts. One is a master account, okay, and an individual account. So I normally using my master account to trade. Okay, so basically that's why this data here is not a live data. However, never mind. Okay, we just show you. Okay, so because the market is not open yet, options market is not like stock market. Okay, option market is only open at 10:30. Okay, I mean 9:30 Eastern times. But now because of daylight saving, so it's 13 hours. Okay, 13 hours. New York is 13 hours behind us. All right. Okay, so when you look at Tesla, we look at the last price. Okay, now Abdul Fattah, okay, what you want to buy? You want to buy call options or you want to sell call options? Sorry, buy call option or buy put option. We're talking about buy first. We're not talking about sell first. Okay.
Call.
Call. Okay, why you want to buy call?
Yeah. Now
let's assume lah. We just do a case study only, you know. Olok punya lah, you understand or not? Okay.
Olok punya is, let's say the trend is bullish.
Oh, okay. So because of Biden's takeover, he support Tesla, you know, this kind of
Yes.
thing, you know. Okay. So okay, when you want to good, okay, so you are very bullish about Tesla. Okay, so basically You can see the date here or not? Okay, this is 4 day up to expiry date. Okay, so you think that this 4 day Tesla, you want to agak, how much Tesla can go up within this 4 day, or you can agak 11 days from now, 18 days from now, 25 days from now, 32 days from now, 39 days from now. Okay, so it's all up to you. Okay, so berapa hari nak agak ni?
Take shorter lah. Later on time decay.
Pandai you, huh? Yeah, you play options before,
But not really lah. Okay lah.
Oh, time decay, because we haven't touched that that level yet. Okay, so basically, okay, let's say you take 4 days lah. Okay, so we will look at the 4 days. Okay, is it or not? Okay, so you want to buy a call options. Okay, so what is the strike price you want to choose? This is the strike price. Okay.
Now the price is what? 400.
Assume the price is 440 lah, 430 lah.
Okay. Take in the money at the money.
Yeah, at the money.
440. 440, yeah. 442.
442.5 lah, huh?
Yes.
Okay, so you can read what is the last price. Just assume that is there's an option price lah.
The last price. 429.
Let's assume what's the price. What's the premium you need to pay?
430. Premium. Premium. 100. We take 442, right?
Pardon me?
We take the strike price.
Yeah, 442, correct.
442. Is it the premium is 600?
Okay.
Yeah,
442
600, right?
is about 6 or 8 lah. Okay.
6 or 8, yeah.
Yeah. So basically, this is the premium you need to pay or you can receive.
I need to pay.
Yeah, you need to pay. So you need to pay 608. Okay. Let's say on the expiring date, okay, Tesla stock go up to 450. Okay, we don't want to using other things lah. Okay, we're just using a very linear calculation lah. Okay, how much are you making already?
450 minus 442 times delta.
Don't want to mention about delta first. Let's say we talk about that. Assume there's no delta, whatever it is lah. Assume it's 1-to-1 lah. You know what I mean? Okay. Assume it's 1-to-1. Okay, assume 1-to-1. Okay, let's assume the delta is 1 lah. You get me? Okay.
Okay.
So basically, if the price go up to $50 at the expiring date lah. Okay, that is on this Friday lah. How much money are you making?
750.
Mana boleh 750?
450, right? Minus 442. Is it like that?
Yeah, okay, 750. Tapi you dah bayar $6.
Minus 600 lah. 142. Sorry.
Yes. So what is the percentage of return?
23%.
Not bad, right? Okay, in few days time, right? Correct or not? Okay.
Yes.
So basically, this is actually a very linear way to calculate options. Okay. Okay. Of course, the real calculation is come to like delta, gamma, all this thing lah. All right. Okay, and theta, all this kind of thing lah. Okay. However, I mean, in general way, okay, this is how we calculate. All right. Okay. So okay. So now, okay, zoom price down. Okay, I mean the stock. Okay. Oh, you mean the stock? Okay. All right. I just see your chat only. Okay. I don't look at the Zoom lah. Okay, because I don't really want to look at the Zoom. Why? I tell you later on. Okay. So basically, what if Tesla price go up to 480? How much are you making? and it is possible, I tell you, for Tesla to go up $50, $70 per day is very, very likely. Okay. Okay. So let me ask, okay, assume other all equal, okay. Kamal Zaman, are you there? Kat sana ke Kamal Zaman? Hello?
Yes, still learning.
Okay, 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 katakanlah sekarang, okay, ini adalah atau patah beli, okay, this price, okay, lepas tu dia bayar 600 something. Why bayar 600 something? Sebab one contract adalah 100 share. So dia
Okay.
kena time 100 lah, 608. Okay. So sekarang katakan by Friday, harga dia naik to 480 lah katakan. Okay, berapa? Okay, how much? Okay, you know, we make.
480
Yeah,
minus
400.
the strike price just now lah.
Yeah, you minus the side price. That's not necessary you make. Oh no, you have to minus again the
Premium.
Yes. Okay. So basically, if you have a calculator with you, okay, you can see that how much are you making? Okay. Okay, like 480 you minus.
442.
Okay. 442. Okay.
Point
2.5.
5.
Yeah. 37.5. Okay, you minus again 6.08. Okay.
31.42.
Yes, and then you times
100.
100. You know what I mean or not? Okay, because
Yes.
100 share. Okay, so wow, that's a lot, you know. So you're making almost like how many percent? 50 or more than 50% like that. you know?
50%, correct.
Huh?
Mhm.
Okay.
Yeah.
Yeah, in 5 days time. Okay. Okay, so this is how you are making money from the options. Okay, so okay, because Tesla stock is very expensive, because the stock is very expensive, of course the option price also very expensive. Okay, so let's say now we choose a cheaper stock lah. Okay, Andrew, what is the stock you want to choose? For example, for us to, you know, example. Andrew, are you there?
Hi, hello. Can you hear me?
Yeah.
Okay. Try one stock I bought.
Okay, what's the stock? Hello?
Yeah. XSPA.
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 Yeah, is it?
Yeah, only one X. One X.
Oh yeah, I know this.
Yeah.
I think you read from somewhere lah. Okay.
Yeah.
Yeah. Okay. I don't know whether this one got options or not, you know, because this is more like considered it's more like a penny stock, you know. Okay. So never mind. Okay. We look at it. Okay. We have, but I don't think this is a very suitable stock lah, because because the price is so very, very low already. Okay. Choose and a good stock lah. Okay, Andrew, I know you are a value investor. You know, you are look for higher one. How come suddenly tukar sudah change already? Okay, okay. What? Pardon? Okay, Bank of America. That's a favorite of Dr. Peter Law lah. Okay, BAC. Okay, Danny, what happened to you suddenly? You know, go to toilet.
My line disconnected.
Okay, sorry. Just kidding. Okay, so basically, okay, we look at the option change here. Okay, so Bank of America actually is a very good stock for you to write options. I have to let you know, because this is quite benign. Okay, okay. So what you do here is okay. What is the expiring date you want, doctor? Hello, Peter Low. You choose Bank of America. Where are you now? Huh? What is the expiring date you want? Because we are talking about call option now. We want to long call now. Not cover call. Cover call is right call. Because tonight we are talking more about the very easy concept. Okay. November 27, 18 days. Okay, we click 18 days. Okay, so I hope you guys know how to look at the price, the table price, or this thing already. Okay, because this is the basic for you to master options. Okay. What happened now? Okay, we go to option change again. Okay, we go to 18 days expiring. Okay, now come up. Okay, because the data is too much. Okay, so basically, okay, now let's say the BOA is what price is it now? It's 26.23. Okay, we're talking about here lah, roughly here in the money lah. Okay, so doctor, now I test you. Let's say you want to buy let's say like you assume that BAC will go up to $27. Okay, what should you do now? By this by you know, by 18 days lah. I mean 18 days still long way ago, possible. Okay, I mean for US stock want to go up $1-2 per day, or it's quite easy one to just let you know. All right, okay, so let's say you assume that, okay, by 18 days from now, okay, BAC will go up to $27. What you plan to do now? Okay, doctor, are you there, doctor? Anyone can help him to answer. One can, very happy to you can unmute your thing. Yeah, long call, what's the strike price you want? Yeah, let's say assume that you think, you know, you have a very big convictions, okay, that BAC will go up to $27 18 days from now. Okay, so what is the strike price you can buy, and how much you can make after you buy that if really the price is go up to 27? Pardon me? Okay, anyone can help doctor or not? I think you know how to operate also. Mathematics is a bit weak here. Okay. If you think the stock price will go up to $27, you know, by 18 days from now, can you buy $28 call options? Anyone can help me? Answer, Dr. Peter. Of course, I know the answer, but I just want to let you know. I just want to see whether you guys are still following or what. Okay, Nash, are you there, Nash? Nash? Is he no? My question here is, if we are very convinced that, okay, by 18 days from now, okay, BAC, Bank of America, certainly will go up to $27. All right, $27. What is the strike price we going to go in, and how much money we can make from there? Okay, doctor just now say $28, but I don't think it's the right answer. Okay, later I will explain why it's not $28. Okay, so Daniel, are you there, Daniel? Since you are a newcomer?
Yeah.
Okay, good. So what is the price we're going to buy? If let's say we very sure that, you know, 18 days from now, BAC, Bank of America, will go up to $27.
26.
Okay, that is more likely to hear lah. Okay, so if you know the price will go $27, okay, is you don't try to buy at $28 or any price near 27 or so. Why? So even the price really chun ngam ngam, okay, that day expiring that one, okay, is $27. You know, after the market close, let's assume lah, okay, you actually losing $8, okay, because why? Because you time 100, okay, you $8, So your option will be expiring worthless. So if you think, you know, I just pay 4 cents, you know, okay, never mind lah, you know. But my question here is because the price will reach $27 only by that day. All right. So you buy $28 differently, your premium is burned. Bakar, habis. Okay. You know what I mean or not? Okay. Although you see 4 cents, very little, never mind lah. But what for, right? Because you already study, you know. Hey, I think based on the chart, Bollinger Band, whatever, blah, 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 blah. I think wait, BAC, the most can go to $27. All right. However, okay, what Daniel do here is he's smart. Okay, just example here only lah. Okay, no, just take example lah. Okay, so basically, okay, he choose 26 because 26 is in the money, we call it, or they still have an intrinsic value because okay, the stock price now is $26.50. Let's assume that lah. Okay, so they have an intrinsic value already. Okay, so Daniel, okay, since you choose $26, how much are you going to make, okay, if the price 18 days from now reach $27?
This one I'm not sure.
Okay, you're not sure, never mind, it's okay. Okay, anyone can help, Daniel? You just unmute your thing because I tell you, if we are doing this way to learn, right, everybody is going to learn very, very fast, you know. It's not I'm the one who talk only, you understand? If I'm the one who talk only, then I don't know whether you guys learning or not. That's not the purpose of the Zoom meeting already. We can using Facebook Live or whatever it is. You know what I mean or not? Okay. The reason we have a Zoom meeting because we want to have a both way communication, you know. Okay. It's good you're not sure because you just first time you attend this course. Everyone can help Danny or not to answer it. Zeno?
What's the question again?
OK， 温先生，我的问题是 OK， 如果你相信 Bank of America 美国银行 OK， 这价钱会上到27块 OK， so Daniel 讲他会买进 strike price 26块 OK， so basically 如果真正的话18天以后 OK， 这个 Bank of America 上到27块 OK， so how much money, okay, Daniel is going to make?
The strike price is 26, right?
Yeah, strike price is 26, correct. Assume he buy at last price here lah. It's a very simple calculation. Doctor, I think you listen to other first, okay?
12 cents.
Okay, so anyone can help? Anyone can help? Okay, I don't want to say lah. If I say, you short lah, so easy lah, this one. No. Okay. Because, okay, how much you are paying? Because, okay, just now they knew you are paying $200.
20.
You times 100, you actually pay $20. You know what I mean?
Yes.
So you pay $20. However, okay, the price now, okay, from $26 go up to $27, you know. Okay.
$1.
Yeah, the price go. You are actually not making $1, but you know the
minus the 20 cents.
Yes, $1 you have to minus the premium. So you're making 80 cents. Okay, just now who said 80 cents? Good lah. Okay, Peter, right? Doctor, right? Okay. So basically, that is actually how you choose when you want to long call. You know, you don't think, you know, I want to, you know, you if say $27, takkan lah. You want to choose, I mean, more than $27 or even equal to $27. Okay, because if you choose this kind of price, the chances is very, very high. You'll pay, you know, you burn your premium only. You know what I mean or not? Okay, you burn your premium only. So even you choose $26.5. Okay, let's assume that lah. Okay, now I want to test people very, very fast. Okay, let's assume that you pay how much you pay if let's say you choose the strike price to $26.50. Anyone can tell me? Don't worry, you know, we all adult here. You just unmute your mic, just answer only. Wrong one is okay one. This is the purpose we learn here.
$13.
Okay. Yes. Good. Now, Mr. Woon. Okay, Woon, huh? Okay. Now the price go up to $27. How much are you making?
$30.
$30. Exact lah. Let's say, you know. Okay. Because in reality, if you buy the stock, right, you take up $26.50. If the stock go up $27, you're making 50 cents, correct or not? Okay, one share. So 100 share, you are making how much? $50? $50. Okay, you buy stock, correct or not? Okay. But if you buy options, okay.
37.
Yes, 37. Now you get it? Okay. So basically, of course, the calculation is not so direct lah, just to let you know. Okay, but we just assume we're just using a very linear calculation. So because I want you guys understand it easily. Okay. You know what I mean? Okay, because options is one of the very complex instruments. Okay, if you really can conquer it well, right, it can help you a lot. It can help you a lot. Okay. Okay, so basically now you understand or not how to calculate, okay, the profit and loss for the from the call options. Okay. Okay, choose another stock. Okay, anyone, Kamal Zaman or Fatah or Albert? Okay, choose any other stock. Huh?
Neo.
Your favorite store, huh? Your favorite store, huh? Okay. Okay, Neo, the Tesla of China. Okay. Wow, today go down, huh? I think look like a bit turning point already. Okay, but it's still the momentum, I think, still very high. Okay, I hold this for long terms. Okay. Okay, now I talking about put options already lah. Okay. So you know, you think that, you know, Neo is overvalued, blah 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 blah, whatever reason to support you, like you have a very strong convictions that, you know, Neo will go down to let's say $35 example lah. Okay, so we choose the strike price at $35. Okay. Okay, because Neo the IV or the implied volatility is very high. That's why the premium is very high. Okay, we cannot see. Okay, now it's 42, or we can okay. Okay, guys, let's say assume that you think that Neo next week will go down $35, you know. Okay. Okay, next week, not this week lah. Okay, we give 11 days lah. Okay, you think that, you know, next week, you know, Neo price will go down to $37. Okay, so of course you don't want to short the stock because it's very dangerous. Okay, but you can using another way is by you buy a put options. Okay, what is the strike price you want to choose? Okay, if you want to buy the put options for Neo, assume that you're quite convinced that, okay, Neo will go down to $35 because you study the chart, you look at the, you know, the very strong support of Neo is you know, this and that. Okay, so basically let's say we look at Neo, you know, you study the chart, you're using trading view. Okay, example lah. Okay, then you study, you know that, okay, this is the, you know, the possibility for Neo to go down to 35 is there, this and that lah. Okay, this of course is all up to your own interpretations. Okay, or you want to protect your stock price, you know, you worry that Neo will crash, this and that. Okay, so basically you know, at $35 you think is a very strong support. Okay, so what you're going to do, okay, to make money from 11 days from now? Anybody can answer me? Because we're talking about option now. Nesh, can you answer me or not, Nesh? Hi, Nash. Are you there, Nash? Hello? Hello? Nash, Maruto, are you there? Okay, anybody can answer me or not? If you think that, very convinced that, you know, NEO will go down to $35, how can you profit from these situations?
I
Buy
will
at
buy at
37.
41.
Okay, okay, one by one. Okay, Albert say you buy at 41. You buy what?
Put option.
Another one? Who else?
37 put option.
Wow, this is a who? Okay, okay, never mind. Okay, 37 put option. Okay, now my answer back, my question back to you here is we start from Albert first. Okay, how much you make if NEO really hit your target price $35 because you are buying $41 put?
41.
Yeah, how much you are making?
So I make $6 minus my premium 4.13. So I make about 1.87.
Why your premium is 4.13? Eh? Where you get
41
one?
Oh, sorry, on the put 350.
Yeah.
350. So I make 250
You make how much you make? So it's six
250.
$6. Yeah, 250 is how many percent? We look at percentage.
250 out of, have to use a calculator.
So I ask you to prepare the calculator because it's very important when you study options. You need to calculate.
71%.
Huh?
71%.
Wow, not bad, huh? Okay,
Not bad, very
71%.
good.
Very, very good. Okay, just now who answered me the $37?
Me, Daniel.
Hi, Daniel. Okay, now how much you make if really NEO go down to $37? $35.
Two minus the premium 1.6. 1.68, right?
Yeah, how many percent?
Then
We see the percentage whether which one is higher.
May I ask the percentage is over how much?
It's over your
Over
cost
the
law.
premium.
Over the premium.
Over your premium law.
Over my 19%, is it?
I'm not really sure because I did calculate. Okay, you're using $2 minus 1.68. Okay, that is your profit. Okay, then your profit you minus but I believe it's lower than what Albert chose lah. Correct or not?
Yeah.
Okay, so you can see if you choose the different strike price, right, will give you a different return. Of course, the risk of course is lower because if NEO really didn't go down to 35, okay, and let's assume that next week, 11 days from now, NEO still remain the same price at $40. Both of you going to burn your premium. However, Daniel only burn $1.68. But Albert burn how much already?
350.
Yeah.
Oh, okay.
You know what I mean?
So anyway, it's buy nearer to your to the predicted price lah.
The price.
Yes. Okay. So it's all the so this is a let's say because put options normally all the price your guy choose are actually out of the money, because the in the money one actually is beyond, is the blue color one, this side one. Okay, this is out of the money. However, because of the NEO volatility is very high, okay, that's why the premium out of the money is still very high. Okay, and what I mean here, the volatility very high, possible NEO can go down to 35 on anytime. You know what I mean? I said the possibility. Okay, the implied volatility we call it. Okay, so that one actually we're going to learn in a more advanced course one. However, you guys already understand the concept and how to do a linear calculation, which of course will be not exactly the same because the calculation involved, like you can see here, the delta, gamma, theta, and vega. Okay, so all these things we don't have time to discuss that. Okay, we're going to use at least 2 days. Okay, 2 nights, I mean, to at least 5 hours. We're going to explain that. Okay, so which we already go through one advanced course already. Okay, so I believe a lot of people will come back again to refresh. Okay, but I believe overall you already have a very clear concept how to benefit, how to make money from long options and long call options and long put option. Long, what I mean, you always say long, long, long. Why? What is that, Mike? You tell me. Long is buy lah, okay. Okay, short is sell lah. Okay, so basically that is a jargon only lah for the financial world lah, we call it. Okay, so basically so you buy, when you buy the call, you expect the price will go up. When you buy the put, you expect the price will go down. However, like I tell you, you have to really estimate what is the price will go down and go up to benefit you. Because even the price go down, I give you an example, like not until the magnitude that you want or the range you want, you're still losing money. Okay, because maybe the premium and the time decay, like what Abdul Fattah said just now, okay, will actually eat up slowly, eat up your premium. Okay, so you have any questions or not? Okay, anyone have any question? Yeah.
I want to ask just now for your example, right? If I believe you will go down to 35, but I buy at, let's say 40, then it went down to 37. Do I still make money?
Oh, very good. You can do your calculations because, okay, 40 you minus 37, it's $3, right? $3 you minus $2.97, you still make money. You only make 3 cents.
Oh, okay. I got it.
You get me or not? But is it worth it or not? I don't think it's worth it lah, honestly speaking. You get me or not? Okay.
Not enough to cover the commission.
Yeah. It's about the commission. Right, exactly. Is it or not? So basically, sometimes that's why you have to be very sharp when you want to choose option. And of course, this is a linear calculation, okay? In reality, okay, you have to depend on all the delta, gamma, theta, which we're going to cover in the more advanced course. You know what I mean? Okay.
Maya,
yeah.
What is the rationale of trading in option? And who come up with all these figures?
Okay.
Any idea?
Okay, the rationale of trading option is for speculator. Okay, for people to speculate, and then for people to collect premium. Simple as that. Okay, people will speculate it whether it's go up. Those people who like to speculate one, who have a very good chart analysis one, like Dr. Ma like that, okay, he will love option. Okay, because if the price he predicted is correct, okay, he can make a lot of money from options. You know what I mean or not? Okay, so basically this is for a speculator or people who can predict, very, very well. On another hand, okay, people who think they don't want to predict one, they actually can collect the premium that the buyer willing to pay. Okay, so basically that is actually the seller option. Of course, the seller option got pro and con lah. Okay, you know what I mean or not? What I show you in the options, that I use one actually is all long option, but actually I'm actually a multiple strategy. Okay, okay, I also short option, I also long option. It's all depend on the conditions. Okay, what happened to the stock price, what you foresee, and how secure it is, all these things, whether you want to make more or you want to make less, okay, or you sure you want to make 80% probability profit. A lot of variables in options. It's not like very simple. It's not like stock. Stock is quite simple. Okay, however, stock you need a big capital. Okay, I give you an example. To buy NEO one lot, okay, you need $40 times 100 is 4,000 US dollars. Okay, however, to buy NEO, okay, call options, okay, at $38, okay, you just need $571. You know what I mean? Okay, so basically that is actually, they give you the leverage, indirectly they give you many times leverage, more about 10 times leverage. And if you are buyer also, you will feel more secure because this $5.71, okay, if you really worried, okay, you don't want to lose more than half, you actually can set a stop loss there. Okay, whatever stop loss you can set there. If the price reach there, it's just like a stock market, you will trigger it. Okay, so it's a very short-term money, okay, but fast money, okay, and you require very small capital. You no need to have a big capital to own the stock. Okay, you just can pay, you know, a very small premium, okay, and then you can have the right to own 100 share, 200 share, 300 share, up to you. Okay, and some people, because they want to protect their capital, okay, I give you an example, like especially fund manager, okay, let's say they buy Starbucks stock, okay, at $85, so they want to protect the stock 6 months from now. Okay, so what they do is they can pay the premium price only. So if the stock if go down beyond that, okay, what they estimated, okay, so basically the stock are protected because they have the right to sell, okay, based on the stock, based on the option that they want. Okay, let's say we look at Starbucks, for example. Okay, because Starbucks actually is a blue chip stock, so normally fund manager like to buy it for, keep it for long term one. Okay, so basically let's say he want to protect, okay, let's say 1 year from now, okay, 1 year from now, or 6 months from now, easier lah. Okay, 6 months from now, we say April lah. Okay, let's say he want to protect Starbucks position, he worried this and that, you know, what happened, you know, so he actually can, okay.
Mike, may I ask what do you mean by protect the stock?
It's like buying an insurance lah.
Mm.
Okay, very good. You know,
Okay.
Daniel, I think, you know, most of the people have to be like you know, ask a lot of questions, you know. Yeah, that is how you learn, you know what I mean? Really, you know. Okay, you have any questions, please ask, you know, okay, because you are the member, okay, so basically you have the priority to, you know, we are giving like a tuition, you know, and it's a free tuition here I give, you know, okay, so basically you can have a one-to-one to ask, you know. So basically, let's say, assume that, okay, the fund manager buy in the stock at $85. Okay, so 6 months from now, he actually can pay one contract $474. He will calculate, you know, oh, it's almost like 5%. Okay, but he don't want to, because he already making a lot already, you know what I mean. Okay, now it's already, let's say, assume now the stock price already 95 lah, let's say, like he already make $10 already. Okay, you know or not, so you know, so $10 from the stock, you know what I mean or not? Okay, so basically he worried this stock will collapse, this and that or what, he actually can buy the put options. Okay, so if the stock is really collapsed, he have the right to sell at this price. Okay, so let's say Starbucks stock really go down to $75, he actually can make from the options already. Okay, he can make almost 100% already because he only pay about $474. Okay, you know what I mean or not? So in a way is they buy insurance, okay, to protect their portfolio. Okay, because you know, some of the big fund managers, what they do here is they are not like us, like, well, want to make 10, 20, 30, 50 over percent one. The most important for them is to protect the portfolio first. Okay, regardless what happen, or they know they are protected, just like buying an insurance. Okay, so this is why how the options market started. Okay, and it already started and since 1970, you know, okay, a long time ago, before I born actually, you see or not. So basically now the option market already reached about billions of dollars per day. It's more than billions, I think. Don't know how many billions of their transactions already. Okay, because as long as there's a stock market, okay, especially in US, okay, and there's an options market already, okay, especially for the blue chip stocks.
Mike,
okay, yeah.
so
Question?
if the price didn't go down, the put warrant also burn lah.
Burn. It's just like premium. It's
Mm.
like you buy the insurance, you protect, you know, because your reason, okay, for us, okay, as option trader, okay, we actually, of course, we have to be very sure it go down, only we buy. You know what I mean or not?
Yes.
Okay. Or else the premium will burn. You know what I mean? Okay. Or you can become the insurance company. That part actually we're going to cover in a more advanced course lah. You know what I mean? Okay.
Okay.
So basically, you actually can collect the $5 also. Okay, but that one you need a bigger capital, or you can using a spread. Okay, like debit, like a credit spread. Okay, like you know, credit spread, debit spread to reduce your overall cost. Okay, to buy the put. Oh, sorry, to sell the put. Okay. So that is actually we're going to cover, I think, in the advanced course lah. That one actually is I like to using spread also lah. Okay, because it actually can reduce my cost. Okay, to on the options. Okay, especially when you want to short the options. Okay, or you want to sell the options. Any more questions? Okay, one by one lah. Okay, we start with one by one. Daniel, I think asked a lot of questions already. Good, Daniel. Okay, this is how we learn. Okay, Albert, any more questions, Albert?
I think we need to start trading, then we learn from our mistake.
Yeah,
Pay
you
to
must.
learn.
I believe the most important thing, the concept is there first lah. Okay. Now I think overall you understand what is call option and put option already. You know.
Yes.
You see, and how you make money from it already. Okay. Encik Kamur Zaman Muhammad Syarif, ada apa-apa soalan tak?
Let's say the option that we buy, I mean, cannot miss the price, the strike price, everything. So the premium may be lost. Other than that, anything else?
Commission lah. Sure, you need to buy. You want to pay commission one, correct or not? Only commission and the premium. That's all. Because when you buy, the good thing here is you have the right, you know. Okay, meaning that you tak perlu deliver. Okay, you tak perlu collect the stock. Okay, that's a good thing. Okay, because when you sell, you need to collect the stock or you need to deliver the stock. You know what I mean or not?
Okay.
Very good questions.
So they mean that our risk is a bit less lah. Whatever premium.
Yes, your risk is very low actually. Because your risk is the premium you pay only. And then in the middle of the expiring date, you can cut loss also. So that means you don't lose all. You know what I mean?
Yes.
I give example just now, like Starbucks, we pay the premium like $4.74, okay, for $85, okay. So in the middle of the 6 months, suddenly you think, ayo, impossible, Starbucks will go down, like, you know, blah, 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 blah. Every day I drive to also, I order my frappuccino, this and that, business so good, and then you study all the chart, you study all the fundamental, you know, okay. You think, aduh, I done what mistake. But now because of the time decay, maybe the premium already go down to $4 already, the price, you know or not? So you boleh cut loss. You cut loss kan? So basically you only lost 74 cents. Faham?
Faham. So maybe it will cover a bit lah on the premium.
Yes, you tak burn semua lah, you know. So when you discover the mistake already, you still can cut loss because the market is huge. Okay, the liquidity is always there one. So basically you don't worry, you can actually close the option by just selling it only. You know what I mean?
Okay.
Bagus. Okay. Hello, Mr. Abdul Fattah. Any questions?
Mike, I just want to ask, if kalau we buy the strike price like we buy the option with the strike price like macam Starbucks, right? Just now, right? 42 ringgit. How much? Okay lah. Let's say the strike price is 80 ringgit lah.
Okay.
And then suddenly the price of Starbucks going down until 70. And then go to the expiry date lah. And then I ada dengar we kena exercise ke assignment ke something like that lah.
Assignment yang tu you tak perlu risau. Kalau you buy tak perlu kena assignmentnya unless kalau you sell. You faham tak? Because you buy you have the right tau.
Exercise ke?
You nak, tapi kalau you buy, okay, buat apa you nak, biasanya kita tak exercise lah, because exercise you have to pay more, you know, you have to top up your account to buy to pay the balance of the stock price. Because I dah explain, exercise cuma normally bagi macam employee sajalah, okay, you faham tak? Okay, macam employee stock options lah. Okay, because kalau employee, kalau you kerja dengan Microsoft, okay, 5 years ago dia bagi option you hanya 550 cents, sekarang jadi 200 something. So you like Microsoft a lot, you can exercise it lah. Okay, so you punya cost hanya $5. Okay, so you exercise at 200, you change it to share. So you actually dapatkan share, you bukan dapatkan duit. Faham tak? Okay. So basically, directly you want to dapatkan duit, you hanya jual saja. Okay. You see or not? So this is called exercise lah. You get me or not? But you're already making huge money already. You see or not? That's why normally the high-tech company in US, okay, they will offer the options to their employee or their associate. Honestly speaking, 2 years ago, okay, when I plan to list one company in US, okay, I do the same thing also. However, the listing didn't go through lah. Okay, because a lot of reason. Okay, so basically what we do is we give the options to some of our investor. You get me or not? Okay, so the options, can be very low price. Okay, so normally when the market open that time, right? Okay, on the first week, second week, right? Okay, you already can make money, or even instantly you can sell it, you make money already. Exercise the option, they call it lah. You get me or not? That is called exercise lah. But normally as a trader, right, kita tak exercise lah. You faham tak? Okay, because exercise you need the capital, or you assign all this kind of thing already. When you sell the option, you must have the obligation to collect it. You get me or not? Okay, so basically when people exercise it, okay, you have to deliver the stock. So that's called cover call, meaning that you must own the stock to deliver to people, or else, right, you punya account hangus. You get me or not? So basically, this is what do you call it? Cover call. Cover call actually is a very simple and powerful, okay, strategy. Okay, which we're going to touch at the option 2 or 2. You know what I mean?
Okay.
That one involve buy and sell lah. You get me or not? Okay, tapi hari ni kita hanya kata buy saja. Okay, risk dia, yeah, very very low risk. Okay, very good. Okay, okay, faham kan?
So the maximum loss is the
your
premium
premium
lah.
Yes, is your premium.
So
Okay,
kalau kita loss memang tak ada kena beli the stock ke?
Tak perlu, because you have the right to do it or not. Faham? You ada hak tau. You ada hak, right? You ada hak. Okay, you nak buat ni pun boleh. You tak nak buat ni pun boleh. Hak lah, itu hak lah. Hak you faham tak? Okay. Dia bukan obligation. Kalau obligation lain, obligation you mesti punya tau. You mesti punya. Kalau orang yang ada hak, dia nak buat macam tu, you mesti menunaikan janji punya. Betul tak? Faham?
Betul.
So when you buy option, the good thing here is you tak ada obligation. You faham tak?
Kalau sell baru ada obligation.
Kalau sell tu memang lain lah cerita dia sudah. Okay. Kalau you sell put, you mesti ada obligation untuk buy the stock. Kalau you sell call, you mesti ada obligation to deliver the stock. That's why that's why the term come out, the assignment and the exercise lah. Faham tak?
Okay.
So assignment meaning that people who actually sell the put one they assign to you already. So you must take up the stock lah. You get me or not?
I see. Okay.
Okay.
One question, Mike.
Boleh?
Let's say my option go in the right direction, and almost expiry or on the day I forgot to sell. What happened?
It depends, lor. If let's say your price, if let's say during the expiry,
it's making money. It's actually making money.
It's making money. You will auto. You actually you are call. I think basically what to do here is I never faced that kind of situation before. Okay, but normally I think basically you maybe it's auto exercise to you. You get me? If let's say your account is not enough, right? Okay, whatever intrinsic value, right, you receive, right? Okay, you will pocket lah the money you make. You will go down. You will credited to your account lah. You know, if your account got enough money, I think they will automatically exercise. You see or not? Okay. I never have that kind of experience, honestly speaking. You cannot forget to close one when you make money.
Sometimes
because normally the lowest price is 0.01. Okay, so you can set 0.02. Sometimes 0.03 you directly get out already. You get me or not?
Yeah, I know.
If you lost money, then yes, you are let left one. That one normal. You get or not? That one very, very normal. Okay, I have a lot of option labs also, 50 cent, this and that labs lah, yeah. So this is actually how the options works lah. Okay, you make money, yeah, you won't you won't forget one. Okay, normally actually you already can what do you call it, when you want to, you actually can set take profit also, you know what I mean? Okay, for example, let's say now you buy $1. Later, just now I mentioned 0.1 cent. One day was a sell option lah. Okay, because I always do that. That's why my mind just now I tell you like that. But normally long one, it don't involve that. Okay, so in long option, let's say you buy in $1 now, you actually can set 100% return if you want. Okay, if you forget, sometime tomorrow the stock push up $1, you directly make $1. You don't know. I experienced before also. Okay, because those option is out of the money one. I think because I combine with other strategy. Okay, so I basically I say never mind lah. Okay, so $1 I think make 100% enough for it lah. You listen very scared, but its option is like that one. You get me or not? You make 20. If you make 20 to 100%, it's quite easy one. So 100%. Okay, so just set there $2 lah. Okay, so tomorrow when limit up, boom, you are directly making $1 already. Okay. Okay, any more questions? Our Dr. Ma, so quiet. Dr. Ma, no question lah. Dr. Ma, I think this is a piece of cake for him lah. Easy for him to catch up lah. Okay, because he understand about Warren, all these things. So I don't think it's a concept is almost same like Warren. Okay, okay, Peter Long, you still have any more questions before we sign off tonight? Peter, you have any more questions? What do you mean by what's the demo platform again? This is the demo platform already, right? Okay. Oh, you mean the demo platform actually you're using a mobile one, right? You actually can download. You go to the mobile, you type MTRADEGO. Okay, then you actually can. I show you in the. You hold on for a while. Let me zoom in. Okay, I think Niche facing some problem. Never mind. Okay, you hold on for a while. Because today we are using a web version. Okay, so that's why. Okay. Okay, so this is okay, so basically what you do here is, okay, you got handy trader already, right? Okay. So if you want to go to demo version, you no need to log in everything. You just click the try demo down here. It directly go down. You're going to your demo version already. It give you 1 million already. Okay. So let's say you want to choose Facebook. You just click Facebook. Okay. You can choose stock here first because you want to look at the price. Okay, and from stock here, you actually can choose options. The data exactly the same like the web one. Okay, so you can see the price here. Again, this price is a delay price. Okay, you want the real-time price, you have to subscribe. Okay, so I believe that if you really serious want to make money from options, okay, the market data you have to subscribe. We will give you free of course when our MTRADEGO, for the option is already is ready. Okay, but that one I think at least minimum will take about 2-3 months if no bugs or whatever hurdle we meet. Okay, but if you want to subscribe the market data, you have to come to the market data here. Okay, and then from here, this one I think we already guide those people who are serious, meaning those people who take option 2021, they are serious already lah. You know what I mean? Okay, so you can come here and then you can choose. Okay, okay, this button. Okay, configure market data. Okay. Okay, and then basically you can choose here, okay, the options, the code bundle, okay, and then you can choose $4.50. Okay, and then you click next, next, next. Okay, and then this $10 they say already, okay, monthly, okay, will be waived. Okay, so you need about $14, about $14. Okay, but if you're active trader, it's about $4.50. You have to pay for the market data. Okay, so okay, so once you have a live market data, it's very easy for you to play around. If let's say you still want to try okay, what do you call it, you know what I mean, you know, okay, Nash, because the signal is very, very weak. Okay, so if not, you actually can try, you just come here, you just click try demo. Okay, you can click in. But honestly speaking lah, okay, if you really want to learn, okay, just spend some money lah, okay, for the market data, and of course to attend our more advanced course lah. Okay, but because it can save you a lot of money, or a lot of frustrations. Okay, if you try and error yourself. Okay, because you try, I tell you already, if you go to advanced course, yes, you pay few hundred ringgit. Okay, as a member, you have a 50% discount. Okay, and then you always can come back one. You know what I mean or not? Okay, meaning that we conduct the course again, and you can always ask me one. You know what I mean or not? Okay, because they want involve a lot of times. So I can't afford to give free. To be very frank. Okay, it's very technical and practical also. You know what I mean or not? Okay, so that is for people who really seriously want to find cari makan in options. But really option can cari makan one. Actually, my income, I derive one every month. About 70-60% is from my options. Okay, for the stock one, normally I using a swing trading or a long term or mid term trading. You see or not? Okay, so most of the times, like when we go for the advanced course, okay, I will show people how to make like 100-200 US dollars per week, which is very good for a lot of people already. Okay, so basically at least can give you some 400, like about 1,006 ringgit per month. At least you can do more things. Okay, so you want to save one, actually basically you can write the cover call like every month. You just collect the premium only. Okay, like for example Apple, right? Okay, if let's say you collect the premium $245. Okay, so even the stock go up, you collect the premium. Go down, also you collect the premium. So basically you have the income, okay, regardless where the stock go. All right, so that is more on a cover call, which actually you can treat your stock like a house. You can collect rental from there. All right, guys. Okay, so any more questions before we sign off today? Okay, because the market is going to open very soon. Actually, I already extended already 16 minutes more already, but it's okay. Okay, Andrew, you have any question, Andrew? Hello, Andrew.
Yeah, I try to digest. Because I'm very, very poor in calculation.
Hey, you are an engineer,
Yeah.
You're an engineer, right?
Yes.
Engineer normally is very good in calculation, right? So
no, but especially this kind of market numbers,
okay, you okay, you don't need to worry. See a lot of complicated thing, okay. The moment, the first thing you need to choose is you ask yourself where actually the price will go, this and that, and then after that you choose that strike price. Okay. After you choose the strike price, you want to long, you look at this side. Okay, of when the market open, you can see bid and ask lah. Okay, and you want to long the call, you choose this side. You want to long the put, you choose this side. That's all. You get it? Okay. I know for people who first time they look at this table, right? Dia punya otak kan macam tercaru tau. Zoom. Apa ni? You get me or not? Okay, betul tak? Okay. So, but to make it simple, you must understand is what is the price you think the price will go. Okay.
It's just like a prediction.
Yes, it's like the prediction based on your chart or what. Because today I'm going to guide you one is more like long call and long put. Of course, when you go to advanced one, you can play range. You get me or not? Okay. And the probability to make money is more than 70%, because that time you can short the options. Okay. You can collect the premium. Okay. You can cover your premium also. You get me or not? So that is more on advanced side. Or else, right? Okay. If you want to long call and long put, sometimes if your chart analysis is good, right? In fact, make you a lot of money already. Okay. If you think the price will go up like $2, $1 now, your conviction is very high. For example, you think Apple will go up to 125, okay? 2 weeks from now, you can buy in the money here. You can calculate directly already how much you can make already. You know what I mean? Okay, Vun, are you there, Vun? I think Vun left already. Vun, are you there, Vun? Vun, are you still there or not, Vun? No more, I think. Okay. Any more question, other people? Ada soalan lagi tak?
Mike, just now you cakap advance, right?
Advance
like the bull spread, the what?
Yes, bull spread lah, beer spread lah, or bear spread lah, all this kind of thing lah. You get me or not?
Like the iron condor, all those things lah.
Yeah, that one actually is a combinations of options only lah. They make it so exotic lah, the name lah. You get me or not? Okay.
Right. Okay.
Okay. The most important thing I would believe, right? You really need to understand one, right? Okay, is the delta gamma theta, okay, and IV. That part is more important. You get me or not? Okay, because from that figure you can roughly gauge where the price go.
Oh, okay.
Yes. You get me or not? Okay, that part is more important actually. Yeah.
Okay. Not only the chart lah. I mean, not only the mother share movement lah. Is it?
Of course, mother share movement is very important, but you, like I said, sometimes you know the mother share will go that price, right? If you choose the wrong price, right? Okay, you might not enjoy the return. You know, you can burn your premium. You get me or not? Because the theta, if the theta normally, if one day they decay 10% one, right? Then 5 days you already half gone already. Faham tak? So this why you have to look at the theta also. Okay, and then you have to look at the delta also. You get me or not? Delta is easier to see. Okay, so theta you have to look at it also, and then you have to look at the what type of stock you can do like that. Yeah, because for a lot of high volatility stock, okay, especially high tech stocks, you can fast in, fast out. That's why I say option is like speed date. You know, okay, speed dating lah. You get me or not? Another word is called one night shot lah. Okay, one night stand like that one lah. Okay, this is options. You get me or not? Okay, but for stock, right, it's like your marriage, you know. Okay, macam madu 1, madu 2, madu 3, madu 4 lah, itulah stock lah.
Alright. Okay.
You understand or not? Okay, but for options, no. Option is you happy
hit and run lah.
Yes. Okay, especially you long and you long option, because time is not your friend, you know.
Yes.
When you long option, time is not your friend. So you make money, kan? You normally if I long, right?
You cannot hold. You cannot hold.
Yes. If a long, right? Normally, let's say a mid volatility stock, right? Normally, if I make 20, 25%, 30%, I already jabut already. You get me or not? And for high volatility stock, normally, right? Okay, I know sometime miracle can happen one, so I don't open any. You get me or not? Okay. So meaning what I mean here is sorry, I don't put a take profit here. You get me or not? So sometimes it can make 1,000%. You get me or not? Okay.
For the high
volatility, like Facebook. If you really know, okay, because you look at the price, it can go up $5, $10, or even to $15, $20 per day. You get me or not? So if you are right one time only, right, for Facebook, right, your 50 cents can $10 to $5 very fast.
Yeah.
You get me or not? This one you no need to like set a take profit, because tomorrow it can be limit up. You faham tak? Bagus. That's a very good question, sir. Okay. Any more questions? Okay, if no questions, okay. If you want to go to options 202, you just actually let me know. Okay, I will actually forward you the information. Okay, and then we will conduct not I think if you decided already this week, okay, normally we'll conduct within 2-3 weeks. All right, so don't worry about your money is few hundred ringgit only. Okay, so if you want, okay, then I will let you know the date. Okay, 2-3 weeks from now. Okay, we are going to have options 202. Like I say, those who already attended the class, I believe when I conduct this option 202 again, okay, a lot of options one or those who attended already, they can come back for free. You know what I mean or not? Okay, so it is unlimited. As long as the course is conducted, you can come back. If not, also you can ask me also in our member group there. Okay, so I'm very happy to answering you. Okay, because I tell you this subject is not as simple like this stock, you know, where you can see a triangle, red triangle, you know, a pentagon or whatever it is. Okay, so you can actually just buy based on the signal, this and that already. Okay, this subject you have to look at many factors, and of course, if you have that kind of advantage like very good predictions with the signal, option definitely will be a very big advantage for you. Okay, very big advantage for you. Okay, because because as long as you know roughly where the stock price, not necessarily you're right. Okay, you actually can make money from range bound. Okay, from upper range bound, lower range bound. Okay, all type of strategy you can conduct. Okay, based on your predictions of the moving of the stock. Even the directions you are wrong, you still can make money. Listen carefully. Okay, I did that many times already. Like my AMD tonight. Okay, I already write a cover call. Okay, and then I do a call spread. So basically, if AMD, okay, beyond the cover call that I make, okay, my profit will be limited already, but never mind. Okay, my other call, okay, will make money. So I get out. So when the price go back again, okay, because AMD is a very volatile stock. Okay, basically I can collect the premiums. Okay, and then I can write it again. Okay, so that is actually the beauty of the options. Once you really conquer well of the options, right? Every week you want to make few hundred US dollar for income. I say for income is very easy. I'm not trying to bluff you lah. Okay, you can start with 2-3,000 US dollar to play first. Then after that, you can make like $100-200 per week first. Okay, you see, and as times you go, okay, you learn more and more, and then you can accumulate, okay, your capital, and you can do a cover call already. You can write a put already. Okay, or you can use a spread to reduce your overall cost. Okay, or you really worried, you can use an iron condo. Okay, for the stock like Roku, a very, very volatile stock. Okay, you can easily make about 800 to 900 US dollars per week. If you can, let's say you're using an iron condo. All right. Okay, so this is the beauty of the options. Okay, once you really know how to use it already. So making about 200-300 US dollars with the capital of 2,000 to 5,000 US dollar is very, very likely and possible. Okay, and of course, this is the way also you actually can trade for like goreng lah, we call it lah, but it's not goreng. What I mean here is fast in, fast out, because option is a very fair market. There's no people actually know about something. Yes, they are, okay, but you can write with them. Same thing like stock also, okay, you see or not? But what I mean here is fair market here is, okay, there's nobody can like throw the stock instantly one, okay, like when you goreng a penny stock, yeah, you're very happy, like today also I see all the people talking about AT. Okay, I don't know what is AT also. Then suddenly got one old man stand behind called KYY, sitting, take one photo, on the paga there with a signboard there. I look at it, this is really like a boiling room, boiler room, you understand me or not? Okay, you talking about Supermax, you talking about all this, that one, of course, I feel more comfortable, you understand me or not? You faham macam mana tak? Okay, at least then when I buy in, right, I know this company, this and that. But AT, right, one old man suddenly stand beside, lagi kilang pun tak ada, cuma one signboard sana, apa dia AT engineering, okay, okay. Really, I would look at it, oh my gosh, you get me or not? That is not the way I play, honestly speaking. Okay, that's not the way I play. Okay, because even I play option, you look at the stock that I choose is all the stock. At least I know how it functions. You know, you see or not? Okay, because in stock, when people go rank from 1 cent to 2 cent to 3 cent, those big player, okay, they want to dump it. The moment they dump it, it can be boom. Normally go back to 0.01 already. You get me or not? Okay, but in option market, it will never ever happen like that. Okay, unless okay the stock price go down heavily. Okay, but again, because you know the strategy, don't worry. If go down heavily, you can using a put spread to protect your downside. Okay, and then you can using a cover call to collect the premium to reduce your risk. You faham apa sekarang tak? Faham tak? Macam AT macam tu kan, kalau besok turun kepada 0.05, macam mana?
Tonight ada vaccine news lah. I don't know tomorrow how lah. Hey, Mike, Mike, just now just now you said you don't want to buy Zoom. What? Why?
Okay, Zoom because it's the business model I don't feel comfortable because they only have one software. You get me or not?
Okay, alright.
Because to me, okay, even I play options, okay, normally my view, right, okay, is more like either in range or in uptrend. You get me or not? Okay, normally in range lah or uptrend lah. Okay, so uptrend on, okay, normally I will using a bull spread lah. You get me or not? Okay. So basically, for Zoom, I think, you know, I don't know. I don't feel comfortable lah. It's not saying it's not right, okay? Because every month also I pay the subscription fee, bloody hell. You get that? Okay? More people using, but my friend told me you only have one software, you know. You get me or not? Okay, so anything happen now, whatever, like sue by people or whatever, you know, any big news happen, right? The stock can go down very, very heavy because the PE is extremely high already.
Zoom.
Yes. Okay, I don't, you know, I don't know whether they're P or not, because the overall the company to me is only depend on one product. You get me or not?
Yes.
And then it's soft product some more, you know, it's a software, you know. That is the reason. You see, Under Armour is gaining 7 point blah 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 blah, you know, this thing. Okay, so I want to buy something that I feel comfortable, you know, because when you feel comfortable, you know where the stock go. You get me or not? Okay. My Starbucks, you know, even it's a very boring because in term option, Starbucks actually long call and long put is not really good to using Starbucks because Starbucks volatility is not high. You get me or not? So all this actually we will mention in the option 202. Okay. You want to long call or long put, what is the stock you need to choose? Okay. You want to short call and short put, what is the stock you want to choose? That kind of thing. All right. Okay, guys, I think that's all for tonight. Okay, so if no question, I think that's all. All right. Okay, thanks for everyone. Okay, I say if you want to join, Willie, you want to take serious step on this. Okay, just let me know. I forward you the information. Okay, like I tell you already, if you really get the good of that 500 ringgit, okay, honestly speaking, it's very, very tough lah, because that one I think one trade you can make back already. Honestly speaking, okay, and then it's unlimited. Okay, meaning that you can always come back. You can always ask me. You know me or not? Okay. Okay, guys. Yeah. So
Okay.
Good night, everyone. All right.
Thank you, Mike.
Thanks. Okay.
Bye.
Thank you.
Good night. All right. Bye.